The US dollar is marginally changed versus the three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. The US stocks have now turned into negative territory, and the US yields continue to show a steepening, with the 2-year yield now down 1.6 basis points. The 10-year yield is up to 2.3 basis points at the moment. The U.S. Government, House of Representatives, I should say, narrowly passed the tax and spending bill by 215 to 214 vote. Now it goes on to the full Senate. A process expected to take several weeks before this big, beautiful bill could be potentially passed. So let's talk about the technicals that are driving these three major currency pairs. Let's get started. Looking at the euro versus US dollar from the hourly perspective, in trading yesterday, we saw lots of a move to the upside, but then lots of up and down volatility after the price surpassed this trend line through here. The market just couldn't get itself to stretch up to the 61.8% target, which also happened to correspond with other highs going back to here. So that would have been a key target level to get to and through on the top side. But as you can see, sellers leaned against that level early and forced the price back down, not once, not twice, but twice. In trading here today, we tried to make a run to the upside, but failed in the Asian session and have since started to rotate back to the downside. This area right through here between 1.1265 1.1275 is going to be the key support level on the downside for this pair. It corresponds with all these different lows. I'll just put a red line in between this yellow area right here. This was the floor right through here. And then we developed a somewhat ceiling with a couple failed breaks here and here on the top side before breaking to the upside and trading yesterday and forcing its way up toward that 61.8% retracement. We are also back below the 50% midpoint of the recent move down from the April high to the May low. That level comes in at the 1.1378 1.1318 level, I should say. And you can use that probably as close to resistance to kickstart your day. If the price is able to stay below that level, then the bias remains to the downside, and we start to look toward this old floor flat / old ceiling down here between the 1.1265 1.1275 level. By the way, the rising 100-hour moving average is also in that area and near the 38.2% retracement. So all that cluster of support down here is going to be a tough nut to crack if tested. But the bias in the short term, I guess, or just the trading action today is to the downside for the euro versus US dollar. We'll see what happens from here. Let's take a look at the dollar versus yen next, and this is the hourly chart of this pair. We can see that the dollar yen tried to move to the upside in early trading, but after breaking above back above the 200 bar moving average on the 4-hour chart and a little bit above the 50% retracement, it quickly rotated back to the downside. And what the sellers like to see is this bar right here off the hourly chart, where the high price pretty much stalled against the 200 bar moving average on the 4-hour chart and below the 50% retracement, and that gave the sellers a go ahead to push to the downside. That move to the downside was able to get below the 61.8% retracement of its most recent move up from the April low to the May high. That level comes in at 143.225. But just like this break to the upside, the momentum cannot be sustained, and the price moved back higher. We did move back into this swing area between 143.57 and 144.026, and that level or this area would be key, along with the 200 bar moving average up here and the 50% retracement. All this, I would say, like, as long as the price can remain below the 200 bar moving average, 50%, bias is more to the downside for the dollar versus yen. We do have to get below the 143.22 level and stay below that level to increase the bearish bias. However, with traders then looking down toward the swing area down here between 141.64 and 142.10. Let's take a look at the sterling versus US dollar last. And this currency pair moved up to a new highest level going back to, I have to go to the daily chart, going back to this point right here, which is in 2022, March of 2022. We did surpass the 2024 high. That came in at 1.3433. We also surpassed, going back to the hourly chart, the 2025 high price, which came in at 1.34413. So this is the 33 level is just below that level, and then we had earlier highs up here between at 1.3422233. And as you can see, we broke above that level, failed, and then we tried to break above it again and failed. And trading here today, what we've seen is sellers against the old 2025 high, against a 41 level right through here. And as long as the price can remain below that level, then the sellers have a chance. Let's just say they're in the ball game. Obviously, we're at the highest level, they're near the highest levels going back to 2022. So you can't say that sellers are in firm control, but you can say that if you want to lean against the prior highs, and with the high prices not once but twice holding against that 134.41 level here today, there is some selling interest. Now, you could also say that the low price that we saw in trading here today couldn't get through this swing low right here, nor could it get to the 100-hour moving average. So those levels need to be broken to increase the bearish bias. If they are not broken, then the chances are we're going to go and make new highs. So there you have it. Look at 3 major currency pairs to kickstart your trading day. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.